There's immense interest in FANG, and Asia do have their similar stocks. So the most obvious comparables would be Tencent and Alibaba in China. And if you think about the businesses Tencent and Alibaba control, they're almost like a Facebook, Amazon, Netflix, all rolled into one. In terms of where these stocks trade, let's just use Tencent as an example. It's trading on roughly 35 times earnings, not cheap, and it's actually about the same valuation as a Facebook. But if you look at a Tencent, you say, well, at that valuation, why may this company still be interesting? And there's a few factors. So the first is the company is still growing a lot faster than its Western counterparts. This is a Tencent in recent results is still growing its revenue by 55% per annum. It's very fast. Second, there's still a large number of businesses in there that are not really being monetized. So in terms of the ad load they're capturing on their Facebook-like newsfeed, you're getting 2 ads a day. That's very different from Facebook in terms of their ad load. They're funding a Netflix-like online TV business that's still, making losses, so that's a drag on profitability. So when you put those things together, the outlook for Tencent still looks relatively interesting. I think when people think about value, they simply just first look at, they always say, oh, it has to be on a low PE. But a fast-growing company, look, when you're growing revenues at 50% per annum, it doesn't take you very long for the revenue growth to really bring that earnings multiple down. So we do have investments in fast-growing companies, but when we're making those investments, generally there needs to be a kernel of uncertainty that's giving us the opportunity. And an example of that in the past would have been PayPal. So when we were buying PayPal, the stock was on 20, 25 times earnings. Visually it doesn't look cheap. But at the time there was huge uncertainty around what Apple Pay, so what was the effect that Apple Pay was going to have on PayPal. There was worry that Amazon was going to get into the payments business. So there was these very big, still large questions around PayPal that were keeping, a lot of investors away. Which we thought were overplayed. So, it doesn't necessarily mean that we're looking for value. It means that, it doesn't necessarily have to be, dirt cheap PE. You can see value in these high quality businesses where there's the revenue growth to really back it up.